So we're having just a little panel discussion here today, and mainly it's for you guys to ask any questions that you think are prevalent when it comes to social investment. So does everyone want to introduce themselves really quickly? So I'm Hannah, I'm the partnership manager at Social Investment Business, SIB for short.
Hi everyone, I'm James from Groundwork.
Hello, I'm Linda. I'm an investment manager at Big Issue Invest.
Carlton Smith, Bradford Trident, grantee.
Adrian Bean, the lead investment manager at Key Fund.
Christian Stannard, Senior Relationship Manager, New Business at Social Investment Business, SIB.
Ash, Local Access, Bradford District. Cameron's had his lunch and he's gone. So I'm Cameron this afternoon.
Thank you. So I'm just going to start off, if that's okay, with just a question for the panel. So what barriers do you guys think are most prevalent when it comes to organisations trying to access social investment? Christian, if you'd like to start.
In terms of barriers in social investment, I think you can look at it, obviously, there's a couple of different ones. There's often there's internal barriers, and obviously the sort of organisation you are, the way you're constituted, are you able to take on a social investment? Do you have the trading model that will allow you to generate income and obviously service that can be used to repay a social investment? Because I think, you know, the key term there is it is an investment. It's a loan that's expected to be repaid. I'm sure the other social investors on the panel will agree that, you know, we're not banks. We don't operate as commercial banks. But, you know, the intention is that the investment is repaid. So some of the key ones, the internal ones, it's about the trading model. It's about, sometimes it's the trustees. The trustees can, you know, historically they're quite risk averse. You know, so, you know, if you're sitting there as a chief exec or, you know, a general manager of an organisation that can see the benefit in taking social investment, you often have to take trustees on a journey with you to get their buy-in to take it on, because, you know, it's a different mindset for a lot of people, and you know, it's quite a brave step. So those, they can be some of the internal ones. At Social Investment Business, what we found is some systemic ones as well. This is specifically for organisations, and the way we define them is organisations that obviously black and minoritized ethnicity-led organisations. So historically, those organisations have always been massively underrepresented in social investment, and we, you know, kind of our learning, what we found is during COVID, we offered a loan fund called the Resilience and Recovery Loan Fund, which Bradford Trident obviously benefited from. I've got some stats on that. For that loan fund, there was 213 applications, and there was 64 investments made. Only 3 were made into organisations that were defined as BEME-led. So, you know, we recognise that and we want to do something slightly different. So when we launched our new loan fund, which is the Recovery Loan Fund, we reduced the turnover requirement. We reduced, obviously, the minimum amount of loan, but what we also did, we went out and actually raised some grant money, which allows us to match the loan 100% with unrestricted grant. So that means an organisation that qualifies can come to us, and if they need £100,000, we can do that as a £50,000 loan and a £50,000 grant, which is a really, really kind of good offer. So that's one of the ways we've tried to address some of the systemic barriers to organisations raising social investment.
I think one of the first things is right at the start is awareness. So a lot of organisations are just not aware of what's available to them. And once you explain what it's all about, you can see the lights coming on. Then I think the next barrier is probably risk aversion, as Christian was saying. So often I speak to CEOs and they say, this sounds good now, I've heard about it. This sounds like it really worked for us. So we'll go and have a chat with the board members, and the board members or the trustees are, we don't like borrowing money, we like grants. And personally, my view is any organisation that's purely grant dependent is running a very high risk strategy at the moment, because we don't know what grant availability will be like in the future. And then the next question, that if the board are happy to look at it, is where does this leave me if this all goes wrong? Where does it leave me? So they're actually very nervous about it. From a risk perspective, well, the simple answer to that is We only support incorporated organisations, and in legal terms, an incorporated organisation is a bit like another person. So we lend to that other person, not to the board members, not to the trustees, not to the CEOs or the staff. We lend to the organisation. So assuming that there's no security taken, which is the majority of what we do, we don't take security, the liability lies with Key Fund. If the organisation goes bust or fails for whatever reason, that's our risk. There's no individual liability personally from those that have taken on that funding. So I think it's a mix of everything combined, but that's normally the process we go through. It's the awareness, it's the board members' hesitancy, it's worrying about the risk, and then I think the next thing is preparedness. So it's understanding what will be required to move forward, and usually that is a business plan and a cash flow and that sort of information. And through the Bradford Local Access Programme, there's the grant available to help you do that. Wider than that, in other parts of the country, we've got an organisation called Reach Fund where we can get a similar grant to enable the client to be able to pull those documents together. And once we get to that point and they've got the business plan, the cash flow pulled together, we can then, it's quite a lonely job running an organisation, so we can give a bit of comfort. And actually, when an inquiry comes in, I look at it, or one of my team look at it, then we go out and we sit with the client and we look at it in a lot of detail. Then a report comes through to me, I look at it again. Obviously the CEO and or the trustees and board have looked at it, and then it goes to our board members and they approve it. And by the time it's been through that, you've had 5 or 6 pairs of eyes over it. So you're as sure can be, and nothing is certain in life, but you're sure as can be that it's something that has a chance of working. And if at any point in that process we didn't think it was a viable or a right thing for you to do, we would tell you and we'd call a halt to it at that point or look at something different. So I think it's, like Christian said, it's all of those points, and it's all of the points that I've just mentioned as well, I think.
I'm just going to mention, as Adrian's already said, in Bradford we do have the honest broker role, which is Cameron, and he's also been delivering some training to trustees. So where there's a need, if an organisation wants us to come out and speak to the trustees to explain the process, explain the programme itself, and I totally agree with what's been said around the ability to pay, the grant dependency, also in terms of the social impact, people kind of making sure that that's quite clear, because that's one of the things that Key Fund do look at in terms of the applications. But we are offering those kind of training sessions. We do have all the different workshops I've already mentioned which take place, so making people sort of social investment ready.
Just to reinforce what Adrian was saying, it's alien to a lot of charities borrowing money. It's a completely different way to do business, and the risk does scare the willies off the trustees, and rightly so. But it does expand your horizons of what additional impact you can deliver for your community. So it's risk and reward and balancing those up, and it's having the confidence in what you're creating and that it's going to generate the return to repay the loan. It's having the confidence in that plan that you can deliver on it. If the board see that, it's a viable plan, then why wouldn't they want to deliver more impact? So.
Maybe just add and say, I think a lot of the investments that I work on, just having that transparency from the investees is incredibly important. And actually, so for example, you send us a forecast of what you're going to do for the next 2 or 3 years, but I work with my investees to really understand what the detail is behind that. I usually want to see an Excel sheet with your calculations in. And that sort of detail can be really, really scary to a lot of people. They feel like they're washing their laundry in public. But really, actually, what most investees say at the end of the day is that kind of process is incredibly helpful to them. They really are forced to sit down and think about things that otherwise might feel like, well, this is way into the future, or I didn't have time to think about that, or, so we really go into a lot of detail that can seem painful at the start, but it really is just something that I think is incredibly useful to a lot of people to go through. And we tend to ask kind of quite probing questions around your income streams, your expenditure. Why is it high over here? Why is it not high over here? You know, and so on. It really focuses the attention on making sure that what you're presenting is kind of really a solid picture of what you would like to do. And as we've said, nothing is certain in the future, of course. But, you know, if we can work together, and then I think another thing that's incredibly helpful for us is to work with people who are quite flexible, people who aren't just set on this is my path and this is my only path. And so sometimes a bit of a barrier can be a sort of very set mind, whereas actually just having someone who's willing to think about, well, what's plan B and C and D in various scenarios, because we want to be able to plan not just for the best case scenario where everything goes exactly according to plan, but as we know and as we've heard from you guys, for example, is obviously that things don't happen as you plan, and kind of expecting that from the start is really, really important.
No, I completely agree, and I think any of the panellists here today would be more than happy to kind of speak to about those barriers and boundaries and kind of explore that with you as well. I had a load of other questions lined up, but you all answered them in your answers. So that's put me in a bit of a spin. So I just want to ask if anyone else has any questions that they're kind of thinking of at this moment in time. Yeah? Do you want the mic over, Cameron?
Probably not. I was just wondering about the future of all these social funding programs. Where are things going to go? And is any of this connected with European Union funding and the Brexit and what the future looks like?
I saw Adrian's hand.
It's an interesting question. A lot of the money that Key Fund taps into, and part of this programme, is yours and my money. So it's not European money. So I think, I might be wrong in saying it was David Cameron, I might be wrong. But it was decided that a lot of people who've got money in a bank or building society that they've forgotten about. So you might have a £5 or a £10 in some bank or building society, and you've never touched it for 20 years, you've forgotten all about it. And there was that much money swilling around that the government decided to pass an awful lot of it to Big Society Capital. Big Society Capital are wholesale funders in London. They won't lend to you, but they'll lend to organisations like Key Fund and Social Investment Business for us to then put out to you guys. We can still go back and get our £5 and our £10 back out because the government had underwritten it, whatever the phrase is. So that money can still be obtained back out. But that money was put out to Big Society Capital in order to help fund the third sector, because it was appreciated how much contribution to GDP and employment, etc. there is out there, and the need. So I think there's another round going through of that. There's plenty of funding around in that side. Plus the other side is that, and again, organisations shouldn't be solely grant dependent, and it's a move away to enabling organisations to be part self-funded by debt finance and part funded by grant. So there's a big aim to do that. So I don't see that moving away, but actually it's not European money, a lot of it's our money, and organisations like Key Fund will borrow it from Big Society Capital at a rate. We'll charge you a little bit more because we've got to cover our overhead, but as not-for-profits ourselves, that just covers our overhead, and everybody benefits, and the money comes out to organisations. And let's face it, we're filling in the cracks, aren't we? We're working in areas where there's a crack and mainstream doesn't cover it. We're picking up those cracks and we're filling those cracks. And I think that's recognised. So I don't see the funding falling short.
And has the sector grown over the last 10 years?
Oh, undoubtedly. I mean, if you look at Key Fund, which is all I really know, we started off 23 years ago in South Yorkshire following the demise of coal and steel industry, helping to support communities in South Yorkshire recover from the effects of that. And now we choose to do this, but our patch now is sort of the Midlands, the West Midlands, East Midlands, and all of England up to the borders of Scotland. So that's how it's grown over that. And there are more and more funders out there now than there used to be. So it is growing, and the demand is out there without a doubt.
I think if you'd counted social investors 10 years ago, I think there would have been 5, 6 max. If you go onto the Good Finance website now and you look for social investors, there's an excess of 40. Yeah, so there's been a huge amount of new entrants to the market. Some of them specialise, some of them obviously specialise by place, so they do place-based investment, some theme-based investment. Social investment business, we've always been England-wide. We now work in England, Scotland and Wales. So we've expanded obviously the size of our programs and obviously the investments that we make. But yeah, it's much bigger than it used to be.
And there's those very nice blended finance options, which it's the sugar on the pill, as it were. They do make a lot of those sums stack up and quite attractive if you've got a proposition that will trade and generate surplus at the end of it. Having gone through it once, and it didn't go quite to plan, but it has created a benefit for us. We'll certainly look at other social investment opportunities going forwards.
Yeah, I think I'd just add as well, obviously going back to your point about, is the sector growing and is it here to stay? So for groundwork, social investment is very much a new area for us. So I suppose like it is for many of yourselves thinking about going into that. So, the sector is growing, and organisations such as Groundwork that's mainly focused on grant giving before, even for us going into this new area is something that we're excited about, and really looking forward to being able to offer different types of finance to organisations. So definitely is a sector that's growing and is hopefully here to stay for a very long time.
Maybe to add actually that, so we do work with the likes of Big Society Capital and Access Foundation, which are kind of government organisations that are funding kind of core bits of money in this area, and without them I think very few of us would actually exist. But I think on the horizon now, what we're doing quite a lot of work on it, at least in big issue investors, to try and unlock bigger and more mainstream bits of finance, and that's the sort of next stage, I think. So we're looking at how can we unlock things like public pension funds, which have an interest in getting that impact for their money, because it's public sector after all, and so instead of them spending their quite huge pension funds on investing in for-profit organisations and so on, they're looking at, okay, well actually how can we use this unleveraged capital and actually make a difference in the community. So there's also a lot of sort of more mainstream investors, banks and big corporates who are really interested in this area, and the things like insurance companies, etc., who are starting to wake up to the fact that it's not just about maybe cutting out alcohol and cigarettes and so on from their investment portfolio, but there's actually a way they can properly make a positive impact with their money. So again, this is a field that's just growing, and we've just started to kind of scratch the surface of what we can do, and hopefully eventually we'll win over even the big guys and getting them on board to start investing their millions and billions of pounds in this area.
That's really interesting, actually. And I'm not going to lie, I was a bit enthralled because I've learnt a bit there as well. Does anyone else have a question for the panel? I'm conscious of the time and train times as well. So I have one question for everyone. If you could just give one piece of advice to anyone in a social enterprise or charity or similar trading model who want to get into social investment and want to start looking at repayable finance, what would that one piece of advice be?
I think it would be don't be afraid and ask. Get in touch with somebody. We're all here to help and give that advice. So don't be scared. Don't be afraid. Would be my bit of advice.
Yeah, that was going to be my advice. I mean, Yeah, most of the organisations that I work with, I get sent something that doesn't, and then the output often doesn't look anything like what was sent to me initially. You know, it's a collaborative process, so don't feel like you have to have something perfect to present. It's not like I review it once and then it's a yes or a no. It's usually several weeks, sometimes months worth of work together to come up with something. And at the end, you know, hopefully it's, even if you don't get the investment, it's a really useful process to go through your business plan and forecast and so on.
These people want to achieve the same as you do. They want to see social impact and the world a better place. They want to work with you. They want you to succeed. It's a lot of work they ask back from you, but it's valuable work, testing your proof of concept and getting all the foundations right for what you want to do. But they've got wealth of experience. They want to see you get there. Give them a call because they're really useful, critical friends.
I think my comment would be, as has already been said, ask. So the question was asked by Carl, who I can't see earlier on, where he said, you know, Greensville's an organisation, quite a large organisation. What about the small organisations? So my response would be that you're not too small. We will do start-up situations that haven't got any track record, and we'll do 10 million, 15 million turnovers as well. And in terms of purpose, there's very, very little, as long as it's legal, of course, that we won't look at. So we'll look at more or less any amount, and we'll look at more or less any purpose. So just ask, rather than deciding yourselves that we wouldn't do it. You know, ask.
Yeah, I mean, again, I think most social investors now, you don't actually apply. Well, you do. It's a 20-minute expression of interest, and you put some details in about the organisation and who you are and what you might be looking for. The way I talk about it is that's the start of the conversation, and it is a conversation. It's not a 20-page application that you submit and then you know we look at it once. It doesn't work that way. And again, to reiterate Aid's point, I mean, as a social investor, our minimum investment is £25,000. Our maximum is £1.5 million. There's an awful lot of organisations that sit within that. One bit of practical advice is know where what your source of repayment's going to be, because again, you know, I keep on coming back to the point, you know, we can provide blended finance, which is, you know, blended finance is a grant that sits alongside the loan. We can provide investment readiness. But primarily, it is a social investment, and you have to have that source of repayment, whether that's, you know, trading income. So that's normally the first question I ask of somebody.
Thanks. Yeah, I just agree with that. As I said right at the beginning of the other session, this is more about a conversation and not just an application form. So do come and talk to us. You've got the Good Finance, Give Bradford, Key Fund, and ourselves in terms of the enterprise support elements and the different workshops that we offer. So we can support you with your idea to kind of develop that and work with you in making your social investment ready and for your organisation to grow.
I would say, as partnership manager, I've seen a lot of customers kind of come to us and say, well, I don't really know where to start. But right now, you've got a lot of good funders in the room, and you've also got a grantee in the room. So please swap contact details, ask questions. You might not need it today or tomorrow, but if you are starting to get interested in a year, 2 years' time, you know where we are then. Just very quickly, I do see a hand up at the back. Yeah, we have time for one more very quick question. Yes?
So I just wanted to ask, I know we've spoken earlier about the timelines for assessing these applications from kind of submission to actually giving the funding. Is there any reason why the timelines could not be reduced? I mean, just considering that obviously these charities and organisations that are applying to you are addressing social issues and social problems. Is there, you know, a way to kind of reduce that timeline so that you can sort of deliver something that is kind of a bit more time and cost effective?
I love how we all just point to Adrian now.
You might not like the answer to this, but the common thing that we find is if there's a delay, it's with the client. So we might ask for a business plan or a cash flow, or we might ask some questions about, we need some management information, or whatever it may be. And very often it's the client that doesn't come back to us. You know, we might say, look, because our panel meets once a month usually. So we need to do our work in order to get it in front of our panel on the due date. So we might say to a client, look, we just need this little bit more, but we need it by Tuesday this week to get it to this next panel. And by Friday, we're still chasing it. And then sometimes we've missed the panel. So I'm not being critical, but for clients need to be timely and understand that, you know, we have to do our work in order to meet our board, because our board are all volunteers and they're all they've got their own work and their own businesses and what have you. And trying to pull them together, we can't just click our fingers and they come running because they've got other commitments. So we have our deadlines to work to, and often it is the clients that hold it up. Having said that, your point is very right. We're always trying to look at different ways of shortening our process, and sometimes I pull favours in from our board. If I think I mentioned earlier somebody who needed it to pay the wages in a fortnight's time, and I'll beg, steal and borrow from our board to get it there, but I can't do that every week. You know, it's only now and again. So we all have to work together and understand what each other's deadlines are. And I know it's difficult for you guys to pull information together. You're doing things as well, same as we are, but we just got to work together to do it. But we're always trying to cut the process down to minimise it.
I mean, everything that Aid said and more, I suppose. I mean, historically, I mean, one of the benefits of being around social investment, obviously, for such a long time, I've been doing this job for 16 years, is historically we've always had a reputation of taking a long time, obviously, for decisions. And I think maybe, like you say, 10, 15 years ago, that was the case. A lot of it can depend on the complexity of what we're being asked to fund. You know, something more complex or, you know, just with more inherent risk, it's going to take us longer to get comfortable with. Something that's fairly straightforward, or from a larger organisation, we can get it turned around pretty quickly. I mean, you know, I've got examples I can think of where I've gone from application to investment committee decision in 6 weeks, 4 weeks, 5 weeks. It's not that long. It's not something that's going to take 3, 4, 5, 6 months. So yeah, but again, like Ed, we do everything we can to make it as kind of short and as painless as possible. But we are very dependent on the organisation being able to provide the information that we need.
Sorry, on a follow-up question. If you had all the due diligence done in the background, would you be willing to have a Dragon's Den set up?
We've tried different formats for investment committees over the years. I personally used to like it when the applicant came into investment committee, because that meant I didn't have to go in and present the paper and answer all the questions. I used to absolutely love that. I don't know why we don't do that anymore. I know there's social investors that have done small-scale Dragon Dens events where people have gone in and, you know, kind of pitched for money. I think because social investors have their own boards and their own agendas and their own funds, I don't think you'll ever get to a... Well, I mean, I don't know, it could happen, but I don't think it will be the norm for you to go in and pitch in front of maybe 3 or 4 different social investors. I just don't think the practicalities of it would work. But I would be all for applicants coming back into investment committees.
See, I disagree with that. And the reason I disagree is because our board, we do have Dragon's Den, but the punter is either me or one of my investment managers within the team, and the Dragons are our board. And if you would like to come and sit in front of maybe 15 or 20 people and pitch, then I'm going to happily let you, but it'd be quite a daunting process. And the reason we don't do it is we like to treat all clients fairly, and a lot of clients would really be terrified of doing it. That's what they tell us. So we do it month in, month out, so we prefer to do it on their behalf, and then that way everyone's getting a level playing field. But if a client insisted, we would never turn them down if that's what they really wanted to do. But think about it first.
That would be why we don't do it anymore.
It could be. It could be.
Good point.
And maybe just to add, actually, for some of our smaller deals, so if you're applying for something sub 50k, which is kind of for us quite a small amount, then we can for us, what we try and do is we just do it on a delegated authority, as we call it. So we don't even take it to investment committee. We can make an internal decision because we recognise that it's a small amount of money, there's less risk, and we can therefore process an application probably inside, you know, a few weeks, and just to try and speed things up. But I guess one thing to add as well on the timing is that one thing that just goes up, like a little flag that goes up in my head, is if someone comes to me and says, I need money for 2 weeks' time, that makes me wonder, why haven't you noticed this earlier? And then, you know, I go into thinking, because part of my due diligence kind of process is always the governance around the money. And then I wonder, why is no one checking their finances before they got to this crisis point? And so, you know, it's always also good on the investees' behalf to have good processes in place, and we can help there strengthen those, but also think from the beginning, what kind of, you know, controls do you have of your finances, for example? How far into the future are you looking to make sure that you have the money in place to be able to make kind of key salary payrolls and so on? Yeah.
Right, well, unfortunately I have to wrap up now. But I just want to say a massive, massive thank you to everyone sat here today. You've been absolutely amazing answering all the questions and also having the stalls. And a massive thank you to everyone for coming out as well. It's been absolutely amazing to get everyone in the same room and to network. And like I said, get contacts, make these connections now. And hopefully this time next year we can do the same thing. So thank you all so much.